An official note before we begin, this episode was recorded in August 2022. Even though we jokingly keep repeating ourselves throughout the episode, nothing on this episode is financial advice. We have limited the scope of what we talk about for that reason as well, and we ask our listeners kindly not to sue us. Anyway, let's get on with the show.
The American financial system is rocked to its foundation.
You're saying that at 8% the bonds fail and we are already at 4%?
That's right.
If they go to 8, it's Armageddon.
Yeah, that's right.
How come nobody's talking about this?
Now it's official, we are in a recession.
Thousands marched from Manhattan's Foley Park into the heart of Wall Street.
All day, all week, occupy Wall Street.
If that sounded familiar to you, you know that that's the sound of the mayhem that ensued in Wall Street after the markets crashed in 2008. I was 8 years old back then, in a socialist North African country, relatively sheltered from the fallout. Many of the people listening to this episode most likely remember that time much less favorably than I have. This is why for today's episode we decided to talk about our inevitable guests, the recession of 2022 and 2023. We invited a finance student and an economics graduate, Anas Elmangoush, and our very own Talha Faisal, to make sense of what to expect in a recession by discussing a little bit of the history of, the reasons why, and oddly enough, the possible opportunities during a recession. But this time, Watson, we start by doing this elementary. The purpose of this episode is to help get anyone who doesn't know enough eco or finance to understand the mechanisms of a recession, just enough to feel confident in navigating it and its complicated vocabulary, and hopefully inspire further inquiry. We do not do these exclusionary episodes for a segment of our audience often, but this time, we truly believe for those people, it is worth it. So for the more knowledgeable listeners or the unkeen, if you find this episode to be too basic, we understand if you tune out at any time. We will be here next time with something for everyone, but I recommend nonetheless that you stay. If not for the recap, then for the fun we have along the way. If not for that, then just keep this episode playing as background noise so we can meet our listener quota. We thank you in advance. Let's get this class started with our amazing guest and co-host by announcing this is the Glass Prism Podcast. Enjoy. Enthusiasm.
All right.
Like say it as if like you're announcing it to Spartans going to war, brother.
All right. I'll start off the list right away. Okay. Hey, everyone. I'm excited to be here. Yeah. My name is Anas Elmangoush. I'm an incoming fourth-year student at the University of Toronto, Mississauga campus. I specialize in finance and major in economics. I'm currently interning at First National Financial as a third-party residential underwriter. Basically finance, for those who find those words a little complicated, but and I'm also the VP Finance for IB and UEC, some of the academic societies at the university. And lastly, I'm a podcast host and producer as well. Check out Investigating the Realm of Finance if you're curious about it. And they're excited to be here. So
Anas,
yeah,
can we talk about the political and economic state of the world?
I mean, sure we can, but I think to speak on behalf or kind of describe every country would be pretty grand because some countries might be, different positions per se. So it would be tough to give a one short answer for all. But I can tell you definitely in Canada and probably majority of other countries, we're definitely facing some form of recession or kind of an inevitable cyclical phase. So we can kind of, I guess, delve in a little bit.
Talk to me. What's a recession? Like if you're going to put it in layman terms.
Yeah, sure. So, you could think of it, I guess, somewhat of a significant decline in economic activity, or to put it a bit more specifically, when you have 2 consecutive quarters of negative GDP growth, then you're pretty much looking at a recession here. But there can definitely be variety of causes that could lead to it, and we can definitely delve more into that as well. But
So is it just when you talk about slowdown in economic activity, are we saying like
people are buying less, people are spending less.
Yeah, talk to us specifically about
right. So
right now, like I'm just going to give you some context to the questions, because to my understanding, we are going into a recession, if not have been in a recession for just like a few weeks, right? Now, the causes to what results in a recession are very nuanced, particularly for, let's say, our Canadian listeners and some outside of Canada that have similar economic issues. What's contributing to this recession that we're experiencing?
Yeah, definitely. And I think to add a little bit context, when describing recession, we typically look at, you tend to see things like a rise in unemployment, production level might go down, consumer spending would probably go down as well. So this is the kind of stage that we'd be heading at or currently at. And in terms of, I guess how we got here, it's interesting because, you would listen to different people and they would have kind of different perspectives or approaches as to exactly how we got here. Some would throw you, the business cycle kind of explanation of, it's your kind of regular up and down scenario, but some would point, to the recent events that we've had, whether it could be even back to COVID building up to that point or something more recent. What are those
events?
So, yeah, it could be the pandemic, but more recently the oil with scenario with situation with Russia that could be at play here. Some of the government sort of policies that they might have introduced, or things like a rise in interest rate. When that happens, what we're looking at usually is because the interest rate has risen. Consumer wouldn't spend as much compared to, I guess, a relative normal stage. So what you can see happening is a lot of families would try to save as much as they can. They wouldn't necessarily spend, and that kind of slows down the economy, or hence, kind of being at a recession stage.
When you say interest rates, like interest rates for what? And how does that affect everybody and the current rate of inflation?
Ooh, that's a good question. I do want to try to find a kind of a simplistic definition of what it is. I think, Tala, do you have any specific thing in mind? Like, how would you, it's weird, right? Because it's like, I can talk about like how it would impact, and then you ask me to define, I'm like, oh.
Because we've taken multiple courses where interest rate could be defined in different ways, and it's used in different ways as well, right? And it's applied in different scenarios. So the way I would think of interest rate is, first of all, you got a variety of different interest rates, right? Even I don't even know like all of them or which one our textbook even often refers to. They just say interest rate. So the general sense of interest rate is called like an overnight interest rate. It's what banks usually lend to each other. It's the basic rate as which, like, hey, if I give you money, right? And if I give you $100, right? And you're like, okay, the interest rate is 7%, right? Interest is the money I want back for loaning you money, right? Basically. Yeah. So plus, you gotta, plus the principal amount. Yeah. So with the $100. So I'm like, hey, for us, after a month, I want you to give me back. So I give you $107. You give me $107 back. So that's essentially interest rate broken down. And when we talk about interest rate, we're mostly going to be talking about the overnight rate or the general like consumer interest rate, where we not the loan interest rate, not the like bond market interest rate. So not the interest rate you see on your bank accounts. It's like the interest rate between the banks that like end up giving money to each other. Yeah, more or less. And then based on that overnight rate, there are some like small plus or minuses that are given to the consumer. It's very small differences, but keep in mind there's also interest rates like the bond market interest rate or fixed market interest rate. We'll not talk about that because that's unnecessary, right? I don't think we need to even talk about that really. That's how I would start it off. Yeah, I think it's pretty much like kind of like the cost of borrowing money. How much would it cost you to borrow money, essentially? And additionally, the other way you could look at it is the cost, or sorry, the payment for giving money. Yeah. Exactly. Yeah, it could go the other way around too. So like if the federal interest rate is like, let's say 7%, which is pretty high, but let's say it is, right? And that's going to affect the banks loaning each other money, which ultimately trickles down to the consumer, meaning that the interest rate there is going to be higher too. Why do people save more if the interest rate is higher? So why do people save more? Yeah. So when you have a higher interest rate, that means the cost of whether, a loan or a mortgage would essentially be higher. Because of that, typically, what we see is families would notice that and they would say, okay, well,
maybe most families wouldn't feel comfortable just spending more like that, and we see the statistics of how most families are living paycheck to paycheck. So when you have especially significant rise in interest rate, it really encourages families to spend less as a result, because of essentially it's like basically expenses being higher in a way when you're looking at anything that deals with interest rate. And it's a lot, and as Salah mentioned, there are a lot of more car interest rates, mortgages, bond markets. It's a lot, but it definitely impacts your spending. And so when families notices that, they typically spend less. And on the business side, it can certainly impact firms, and it would also potentially discourage innovation, which can play into why it would cause a recession.
How does it do that exactly?
So, a firm would be attracted to borrowing money if it's at a low interest rate, and they could use that money to for R&D, for development, develop new products. So when they see high interest rates, they might be discouraged to really go for that option and kind of keep it a bit of a low key.
The reasoning behind it is basically you need a lot of capital for it. You need to borrow a lot of money. You can't just get money from out of nowhere, right?
Yeah,
that's exactly. R&D is expensive. Or research and development is
even
expensive.
Some of the biggest firms with a lot of cash, they would still borrow money for a lot of transactions they use. So
we danced around the idea of why this would be really important for the casual listener to understand. But the idea right now is just that recessions aren't good for businesses. Recessions aren't good for people spending money. Recessions aren't good for the prospects of your job and so on. And so all of these things, obviously, once you factor them in, it becomes very impactful for the listener to consider. A lot of people associate a lot of negative stigma. Well, stigma is negative. A lot of stigma towards the recession, like the word recession and the concept of recession and the idea of like us being in a recession. And as I want you to explain to me, because I've dabbled in this topic a little bit, but I'm nowhere near an expert, and this is why you're here.
Right.
I want to understand, why do some people think of recessions as an opportunity?
That's a good question. And, as much as flattered I am, I just want to make it clear that I wouldn't call myself an expert per se. So definitely none of the stuff would be, I guess, a financial advice per se. But
don't worry, we're gonna put that in the intro. We're gonna make sure that everything is not financial advice, but I mean, it happens, throughout history, right? It happens a couple of times, and depending how it's approached, it could be to some extent, I guess, comes in handy for different stakeholders or entities. I know, for investment strategy specifically, that's the first thing that came up to my mind. There are certain investment techniques you could use in the midst of recession that you could kind of almost take advantage of. For an average person who wants to invest, usually in a recession, you tend to see stock prices go down typically. And depending on your investment philosophy, if you go value investing, which basically you're kind of like buying stocks on a discount. So it's kind of a good thing in terms of, if you see it as, okay, this stock has been pretty usually high, but now it's kind of relatively cheap. So might as well get that now, and kind of when the economy recovers, I can gain from that. Or, kind of a nice little start for a buy and hold strategy. Okay. But in other words, from the investment side, at least, there are certainly some techniques you could use when recession happens that you could kind of be a little bit comfortable with. But
so I definitely agree with you on that. And I think a lot of people, what they need to understand is the recession. The only reason why we think a recession is scary is because of unemployment. You think that's bad, right? Yeah. That's one bad thing. Second of all, when you're in high school, right, you're taking mandatory history classes, or economic history, and you're learning about the Great Depression and the financial crisis, right? Those are two big recessions that we learn about, and people talk about, those are bad times. People lost their jobs. What are the dates for those, I think the financial crisis was 2008, and the Great Depression was after World War I, which was like
1920s,
30s or something like that.
Yeah.
I mean, I think the 1920s and 30s were worse off because people were very, very poor after war. The first World War I, it was bad. A lot of money went into military spending, but I won't get into that. And then again, people remember those things, but I think the opportunity that you can take from a recession is, first of all, we were just talking about the interest rates, right? It's called the cost of borrowing, but it's also the benefit of lending, right? Yeah. So this is why it's a great opportunity to, instead of spend, you could save up more, right? So if your savings
account,
need a savings account for that. So you go to the bank, create a savings account, and you're like, hey, I want to save this much money, right? And they give you a rate and everything, right?
Isn't that outdated though? because
savings money.
Savings accounts. Because I know for like you're better off putting your money even right now. Like I know the stocks are still going down.
Yeah.
But like you're better off putting your money in the market, which is still basically going down.
But like this is more of a, so like you got certain levels of risk, right? It depends on what your risk level is. So
generally, if you put it into an index, okay, just to give an idea of what an index is like just imagine like big companies that make big money are all put into one group, and you're investing into all of them.
Essentially. That's pretty much it. And you're right. So you've probably heard of NASDAQ or like S&P 500.
Which those are all indexes, and you can just like put your money in them. And generally, their return is around, on average, I think about 7% a year.
Something like that. They're positive all along.
Because like we're in a growth than your savings account interest rate.
We're
so just to give some context to the person who's thinking about.
Yeah, because we're often
not
in a
financial
advice. We're not financial advice, of course, but we're often in a growth economy, anyways.
So
like
it makes sense to invest in it.
It makes sense. It makes sense to invest in it, but you gotta like weigh your options as well, right? There's certain risks involved. There's like maybe sometimes some other rates are better. Maybe it depends, right? But like this is a good opportunity to think about the increase in interest rates and think, okay, which options are better? Is it savings with a bank or investing in an index or maybe fixed income as well can be a safe route as well. Bond market with the government as well, those can be safe routes as well. So like there's a variety of things, but some other opportunities can be, again, usually with recessions there's a lot of unemployment, but a lot of big companies have emerged out of recessions as well, like Facebook, a lot of these .com companies, like tech companies.
So it's very complicated.
In a weird way, like a lot of startups that actually happen during recession, it could be because people might try to really kind of that hustle mentality, like I need to do something and
need to make money now.
Yeah, exactly. And that could potentially be something bigger than what one would have thought. And
so there's a psychological impact being in a recession.
And it's it's more of a subjective answer. Obviously depends on how you approach it, but it could be also an opportunity to it's when a lot of employees realize, okay, I need to up my game,
my skills
for the job market. So you develop skills, you try to just learn new things and kind of up your ante, because whether you just got unemployed or maybe you are already employed, but you might fear of what would happen, you start to be a little bit more conscious of what you would want to do or develop. So it could be an opportunity in that sense too.
That's pretty interesting. The fact that like this offers like a psychological effect to people, like anticipating hard times, and so like they develop themselves. To generalize and summarize the idea of why this might be an opportunity is that some people see it as an opportunity to invest while stocks are a quote unquote discount price, because obviously the stock prices for many companies will go down during a recession. Economic activity isn't as big, people are selling their stocks, makes it cheaper, so on and so forth. People buy it, wait until the economy recovers, and make a lot of money out of that too.
And speaking of recovering economies, like a lot of time when you think of like recessions, right, the old ones, 2008 financial crisis or the Great Depression, right, those came about from like huge impacts, like huge external forces or internal forces. Like the 2008 financial crisis was a housing market crash and mortgages crashing and stuff like that, and like bad financial practices, right? That's the reason why it happened. Versus the Great Depression, which was because of a war. That's a huge economic impact, right? A world war, actually. So, I mean, we do have some similar external or like big economic factors that are taking place today, like the war in Ukraine and Russia, the supply shortages with oil and as well as semiconductors, right? Those are also factors. But then there's also factors like cryptocurrency as well. There's a lot of factors in play here that are similar to past recessions, but there can also be reason to believe that the recession that we're going to face isn't going to be as long, right? There's a lot. Technology has changed our world significantly.
It's not going to be as long.
So for example, if you were to go into stocks and you notice a stock market falling right now, right? Again, like Anas mentioned, you buy them while they're low, and who knows, maybe in a year's time they might be back to where they were or even higher. So
Okay, so you're anticipating the outcome of this recession, like the bounce back is going to be similar to that we've experienced in the 1950s, 1960s.
Something like that. We just constantly learn from our mistakes over and over again. Exactly. And there's just some, I mean, I know history does sometimes repeat itself, but like there are just also, in addition to that, other factors in play. Like people are more financially literate nowadays because of technology. You have more access to information like the internet and stuff like that, where I get like 2008, we did have it, but like, I think the younger generation is also just a whole lot more, like our age is a whole lot more, has a lot more access to this information. So there's also that factor as well. Right.
So that offers a lot of opportunity. Now, to be honest with you, well, a lot of what you said, like I have personal opinions regarding this that I think will most likely conflict with yours. I still think it's a really good opportunity for a lot of people to make money. Recessions actually like bloomed the most millionaires in any period in history. And so this would be an interesting discussion, but I want to ask you, Anas, do you share the same sentiments as Talha? Do you feel like this recession is going to be a little bit different from the ones that we've seen in the past?
Yeah, I mean, throughout history, I think recessions have been at different scale and length as well. Recession could be a couple of months or worst case scenario, a couple of years. So it certainly has been different. So I think it would be not reasonable to assume it's going to be exactly the same as it was before or the one before that. Whether it's going to be shorter than the other ones, I personally think it would, like, I do heavily align with what Taha said. Of course, at the end of the day, anything can happen. So, I don't want to kind of give hope to a lot of listeners here, but
they're going to be emailing us saying that like
they invested their whole life savings. You told us it's going to be 3 months.
We're going to get sued, bro. Like we haven't even made like 20 episodes.
We can't get sued. We already mentioned this is not financial advice.
So
I'm just saying somebody's going to still try.
But
just for them out there that want to try, we have no money. Please do not come out.
Listen, I'll give you $10 and then that's about
$10 to shut up and leave us alone.
But technology has definitely been a factor, and certainly in some economic theories, it's like a really big drive in the long-term economic growth. And I think definitely the environment has changed since, to go back to the 1930s, 40s, 50s. Globalization played a role here. I could see some cons to it though as well. For example, like the supply chain issue. Like if you have a major thing hitting one, then the others are probably going to be hit by it as well. So there could definitely be worrying signs to it, but
it's hard to tell. It's just really hard to tell.
It's hard to tell. Like definitely there's some science to it with economics, but it's also there's definitely a lot of area of subjectivity, and
and economics is also just a theory at the end of the day. There's a bunch of the economics is just built on many theories and models, right? That supposedly work, but remember, economics and theories are always it's a social science, so it's built off of past and historic things that we've learned or what we can learn from like surveying people or looking at current stats, but we don't know what an outcome could be in the future. We're basing it off of previous records, and the world's constantly changing. And like any day, some other theory could come by. Even in economics today, there are conflicting theories about how economic models work. Again, we don't know what 100% could be the right future outcome of that.
I was about to mention, like, for people who might not be studying economics, like there are debates even within the field of economics of how certain thing would work or cause it or effects of it. It would be foolish of me to say with like 100% certainty that this will happen or that would happen. But my quote unquote prediction would be that it wouldn't last long. Not to some of the ones we've seen in the past. But, I definitely wouldn't say it would be an easy ride per se. But again, depending how firms and consumers would act in the following months, because anticipation could be also a key factor, like how consumers mentally think. Usually if the recession hits hard, consumers might anticipate that if they anticipate it's going to be longer by some sort of psychological phenomena, it could actually last longer. So depending on how we also think about it, it could impact the outcome.
So this is why the both of you are like interested in this isn't going to last long, in hopes that people don't think that it lasts long. But
I mean, there's reason to believe why it could last long, right? There's just a lot of worrying signs, like you mentioned, which is like supply chain stuff. There's a war happening in Eastern Europe, right? So it's like there's a lot of worrying things, definitely, that can suggest that this is going to last longer than it should, or like it would.
But why specifically do you guys think that it's going to not last as long as it previously has? Because, like, for example, the one in 2008, right? How long did that one last?
3 years-ish. So it was from 2008 to like around 2012.
Yeah, it's pretty long.
It was pretty long.
Yeah.
Like compared to many.
Well, the Great Depression was longer, but of course we learned from our mistakes.
But that, we have.
That was a totally different. That was a global sort of recession.
Yeah.
This one was like
we have a very different.
This was the States really, because like even with the financial crisis, right? Canada was slightly affected. It wasn't crazy, right? It was mostly the States that.
It was
that took the fall, but
and it involved a large bank going bankrupt. So
many large banks.
A couple at least. But
it's so like we mentioned, technology as well as the fact that we learn from our mistakes are two big reasons why, and people are more financially literate than they were before. Are big reasons why we believe that a recession could be shorter than we anticipate.
And I'm going to share my opinion about what you guys talked about. You can continue discussing this. So a lot of people are graduating. Usually during recessions, people tend to put off their masters, right? Graduate studies usually and stuff like that. But one of the reasons I'm going to cycle back into the idea of why I personally think the recession is going to last much longer than people believe. And the main reason is because of the fact that there are some huge political factors that make it very difficult to believe that we are in a good position economically for us to bounce back. And one of those reasons is that, how we talked about globalization and why that's like we are in a very different economic playground than we used to be in the past. What globalization does, other than like offer the opportunity for people to economically start being dependent on each other, is basically have that dependency be challenged whenever some geopolitical issues arise, right? And what I mean by that is basically like, let's talk about the semiconductors, right? That has affected the supply of a lot of pieces of technology, right? Unfortunately, that type of issue doesn't get solved overnight. Supply issues specifically with China is huge, especially for the North American population. They're highly dependent on China for semiconductors, on China for the production of like the vast majority of things that are coming from Amazon, and the like so many consumer items that you might not even think of that are highly dependent on the manufacturing there, that have now become much harder to manage in the current economy.
I mean, you just got to look at the car market. Rent cars, used cars are just like at the same price as actual like MSRP new cars, right?
Yeah. So that's again, like that's a perfect example. The other example is like one of the reasons that we're having houses that genuinely are very, very, very expensive and unaffordable is because of the fact that the equipment that people use to make the houses are incredibly expensive. So like all of these companies that build houses are just like literally just abandoning different projects because they're like, okay, listen, there's no point in us continuing. We might not even make a profit here, right? Even considering the fact that like the housing market's still going strong, which is odd during a recession, right? Yeah. And with like even higher interest rates. And that's because of the fact that the supply of houses are so low compared to the demand.
Yeah, housing market is an interesting one for sure. I think like back in the 60s or 70s, an average worker would be able to afford an average house, but I don't think that would be applicable anymore because of
an average house today is considered an apartment. Like a small apartment.
The standards have changed too. Like when I said, average house back then, I'm talking, an actual house. An average worker could actually make a deal with that and like afford it. But
America's so big on pools, bro.
Yeah. By the way, pools, like whoever is in the pool business right now is making a lot of cash. I don't know if you guys know this,
within
but
the last like 5-10 years, bro, pools industry has been huge.
No, especially in the last year and a half, like it increased 300%. Like everybody's trying to get a pool, build a pool, like get pool servicing, things like that.
I don't know if it's this image of American House or whatever, but it's definitely
it's the new white picket fence is what's it.
The new trend.
But like for those reasons, and the reasons because of the fact that these problems aren't easily solved, like I'm anticipating the recession to last a little bit longer because all of these things make it very difficult for the economy to jump back up, especially the supply chain issue. Like if all of your items that you need to build your business become very hard to either obtain or very difficult to even afford, then it becomes very difficult to start the business in the first place, right? So yeah, like a lot of people are also considering the fact that, like, at least now for groceries, right? I don't know if you guys have noticed, but the restaurants obviously haven't increased their prices to match the inflation, even though like food here is still expensive, right? Like if you eat out, you're thinking about like, what's the cheapest meal you can possibly get? Like $10? Like for a decent,
even Tim Hortons is starting to get a little expensive.
Yeah, like 10, 12.
Wendy's and Popeyes are expensive now. Like
last time I ordered
Wendy's
coffee,
and Popeyes are more expensive than they were 2 years ago.
Yeah, exactly.
Yeah,
$10 or like $12 now for like a meal.
Yeah, which is fascinating because that's still cheaper than if you got the same things from the grocery shop. Do you know this? Like people have actually sat down and actually like looked at the stuff they've bought, started cooking at home, realized, damn, what I made was like $16 like $16 like cost me, but it also cost me that energy. Yet if I got a sandwich from whoever, obviously like the quality won't be the same, but considering the fact that we're like comparing apples to apples here, it's it's a meal at the end of the day. It's still more expensive. That's why I'm a little bit pessimistic about the jump. Not saying that the people who are listening right now do not have an opportunity to actually make their financial situation better. Obviously, do your own research. Think about like what to invest in. Guys, for whoever is investing or thinking about investing, research dollar cost averaging. And because it's a proven way to invest.
We're here not to give financial advice, but to spark something.
No, like I'm telling them to research, to do the research.
Definitely. I'm just adding on to that. It's like we're not here to like give you financial advice, but we're more here to spark an idea in your head.
Why you should be thinking about the recession.
Or at least be curious, because definitely what's happening today is, it's something that would impact anyone. And I think whether you are studying business or not, or economics, it's definitely something worth to look at
because it affects everybody.
Yeah, just because of its application to it. So hopefully this sparks a bit of curiosity and kind of digging deeper for it. But
awesome. So in terms of jobs, we already talked about the employment rate being low currently. Yeah, we anticipate it to go up. Yes, no.
Unemployment rates, what you normally find from a recession is to increase, right?
Normally, yeah. Well, I think we've seen a couple of headlines recently, like with Netflix. I think they've had some layoffs.
So it's so tricky to figure out the job market. Like I am in no place or I don't even have an idea of how the job market works. Yeah. I'm sure there are recruiters and people who have worked in the industry
who still for a long time, an idea of what's
who may or like who have a really good grasp of understanding how like job cycles and job markets work, but like they probably know much better than I do because I genuinely can't think about it. I'll probably have to do more research on it, but it varies so much industry to industry, bro. Some jobs are in such high demand, software engineers and like data analysts, stuff like that. There are many job opportunities for those and they're in high demand as well. But then there's also like some industries where people are being fired, right? It happens and it's very hard to determine what this recession will lead to, right? Because for example, you might think that, because there's supply chain shortages, right? Costs of things have gone up. Let's use an example. The oil prices increase, right? There's the reason why it's so high is because of the shortage, right? And airline companies, right? That's a significant cost for them. But at the and usually from an airline company's perspective, you'd want to reduce your costs, and your other costs are like employees, right? The amount of employees you have. And during the pandemic, I think I didn't read too much about it, but I'm pretty sure people got laid off from airline companies to reduce cost because there weren't many flights happening. The fuel prices were increasing, right, because of tensions in
that's
Europe,
during the
right?
pandemic.
Yeah, and so like that's how they would like mitigate their costs. But for now, you got to also think, okay, you're thinking if costs are so high, you'd expect that the airline industry probably isn't hiring. But like you look now, COVID restrictions on flying have been removed. People are traveling like crazy right now, even though the prices are high. I mean, you just traveled to Turkey. How much of an issue did you?
Actually, I'll show you exactly what's going on.
There's so many delays and stuff like that. Mainly, why is there so many delays? Mainly because of the fact that there's a huge demand and people wanting to fly, not enough flights as well, but also the fact that there's a staffing shortage as well. And you'd think if there's a staffing shortage people will want, and you obviously airlines have increased their costs, increased their prices, right? You would think that they'd want to hire more as well. So it's very hard to tell whether, is it a time for people to want to fire you, or if it's time for people to want to hire you. I don't know. I don't know what to think about this.
Nuanced.
And you really got to do your research, and it varies by industry and what role you're looking into.
Anas, if people want to find out what you're up to, where you're at, what are your socials, where can they find your podcast? Talk to me.
Yeah, so you can find the link in the description. You can also follow me on the socials, Elmangoush on LinkedIn and Insta. You'll see the link in bio. I pretty much go over personal finance concepts and investing fundamentals for anyone who's interested. And thanks for the shout out. We appreciate it.
Yeah, no problem.
Pleasure to have you.
So guys, thank you for listening. It was a pleasure. I hope you found this useful starter to get you thinking about the future, especially in these hard times. We wish you the best of luck. Goodbye.